Everyone. Unblocked is a bi-monthly event series where guests are asked questions in an AMA-style format, focusing on questions relevant to early-stage startups and blockchain technology. Unblocked is sponsored by DLab, a startup accelerator and venture studio that sits within the SOSV family. You can find out more at www.dlab.vc. We hope you enjoy the conversation. Welcome, everybody, to today's episode of Unblocked, where my guest is Nathan Anderson. He's the CEO and co-founder of ScanTrust, which is an SOSV portfolio company. ScanTrust provides supply chain and traceability solutions to governments and brand owners. Nathan, welcome.
Hey, Paul. Good to be here. Thanks for having me.
Yeah. How does ScanTrust, what makes ScanTrust unique in sort of this crowded space of traceability solutions that have sprung up sort of in the past couple of years?
Yeah, so ScanTrust, we've been at this for about 6 years, and so I think we were one of the first movers in this space. And there's really two differentiators of where I see ScanTrust adds a lot of value to companies. And first is our platform. So we've developed a best-in-class connected packaging platform for enterprises, for businesses, small, medium, and large. And what a connected packaging platform does is it allows them to digitize their products, which has become increasingly important, which we'll touch on later, I'm sure, in a post-COVID world. And so by giving each product a unique digital identity, it opens up a tremendous amount of opportunities for a brand to either enable track and trace and greater visibility in their supply chain to reduce risk, as a way to identify illicit trade and counterfeits and prevent those in their supply chain. And then, most importantly, create a new channel to your consumers. And each and every one of these areas is an individual product on its own. And we've developed a best-in-class platform across all three of those areas. So with one ScanTrust code, you can do help multiple areas of your business. And the second area, we have actually developed a proprietary QR code, a barcode that is actually copy-proof. So we've developed a technology we call a secure graphic. It looks like another barcode, but you can integrate it into a QR code, a data matrix, or any type of barcode you see on packaging. And what this does is it still allows the QR code to work in an O2O, offline to online way, which is the power of a QR code by scanning it. But then we also can authenticate that code to determine if it's an original print or a copy. So you actually bring intrinsic security to a QR code, and that's something unique that we've developed and patented ourselves.
And so can you elaborate a little bit further on the innovation around the QR code? So my understanding is that it's based on the fact that printing is sort of an imperfect process. So how does it work in practice? Like it's something to do with the ink and spreading after printing. Is that correct?
That's correct. And just to give more context before we hop into that is, some people might be hearing on the calls, and I get it. The question is like, well, why do I care if a QR code's faked or not? And it's not that counterfeiters go out to fake a QR code. What they do is when they make fake products, they counterfeit the whole packaging, which means making a digital scan of everything. And increasingly, barcodes such as QR codes are going on packaging for tools such as traceability and consumer engagement as a tool for communicating. And so when you integrate our secure graphic, you're absolutely right. What it does is every time you print an image onto a substrate, paper, plastic, glass, whatever it may be, everything that makes up packaging, it's impossible to make a one-to-one transfer of that digital image to the substrate. This isn't a concept that we've invented. It's been known since Gutenberg invented the printing press several hundreds of years ago. And what we did is we just combined our knowledge of printing, of image processing, of signal processing, and machine learning to develop a code that, when printed, maximizes this natural process. And so what happens when you make an original print of our code, you're losing 40% of the information from the beginning, from the bleeding of the ink going into the substrate and disrupting the structure. So when a counterfeiter comes and makes that image of the whole packaging and reprints it, they're already starting at a basis that's only 60% similar to the original. And when they print again, they lose more information. And we're able to, when a scan happens, we extract an image of that secure graphic, send it to our secure servers. At that point, it's like a digital fingerprint thing. Anytime you've given your fingerprint results, right, they're looking at your fingerprint relative to the original file of it or what's on record. And that's how we do an authentication.
How did you stumble upon this? Is this something that you had known about, or this sort of
Well,
process had known about?
yeah, well, I can't take credit for inventing it. I wish I was that smart. That was my co-founder, Dr. Justin Picard. And funny enough, I actually met him, of all places, in a bar in Jakarta a few years before we started ScanTrust. It was at a World Economic Forum event, so we were working, but it was after hours. He's been his whole career for 20 plus years now developing technologies to bring traceability and security to products and packaging. This is a huge problem around the globe. I mean, by 2022, it's going to be over a $2.2 trillion a year problem in terms of its impact on global economies, from both brands loss, government tax revenue loss from this illicit trade. So we're not talking about a small issue. And what struck me at the time, I was in a different job, but I've been living in China, and I actually lived in China for 12 years. And when you live in China, doesn't matter if you're rich, poor, in the middle, Chinese, not Chinese, you live on a daily basis, both in your professional and personal life, being aware that there are counterfeits and substandard products out there in the market. And so when this gentleman was telling me what he was focusing on, it really just blew me away. I was like, wow, this is, you're a rock star. I would totally use a technology that you're developing. At that time, we didn't have the ScanTrust technology. And he got me all excited talking about, I have this mobile authentication technology. Just you take your mobile phone and you authenticate it and you scan. I'm like, wow, that's amazing. And then he said, but you also need this adapter to it. And it was like this 1,000 euro plus big clunky electronic device that you attach on a huge dongle to the phone. And I was like, oh, okay, and it's great. That was great for certain niche inspector applications. But if you want to give a tool to anybody, yourself, me, and just to bring scalability and easy functionality to authentication, it wasn't possible. And what we saw is around 2013, when they started to see some of these phones like the Samsung Galaxy S3 and some of the later, earlier versions of the iPhone, the quality of the cameras was just improving so drastically that you essentially had a high-powered microscope in your hand. And where we came up, Justin came up with the idea for ScanTrust was able to, leverage the developments made in cameras to develop a code that can be read by your mobile phone. And so the security was already there, and the real big innovation that we brought forth was that you can now just use an app on your mobile phone. So essentially anyone with a smartphone around the world now can authenticate their products. And just, in terms of scalability from a cost effectiveness point of view, as well as a user point of view, this was and still is to this day a huge innovation.
And so, so the goods are, the QR code is printed on the good at the, where the good is being produced, or are they shipped to a factory you have or something like that?
Yeah, we don't do the printing. We're just, we provide the platform and the code generation. We integrate into the existing printing and packaging processes, which are already done by brands. So typically large brands, they're outsourcing their printing and production to a professional label or packaging supplier or converting factory. And so we integrate ourselves into their regular process. Just as you would add in a normal 1D barcode, the type of code that you print out and you scan when you're checking out of a supermarket. We integrate it in the same way. And so it really is, from a cost implementation perspective, is also extremely cost effective because you don't need to change your existing processes.
And what was it like trying to sell? Did you find that it was an order of magnitude easier to sell because it's just like, hey, listen, you already have the machinery, you already have all the materials. It's really just a software that you're implementing. Did you find that it was just made it in order? Were you exploring other ways and you focus on that one because that was just like the lowest barrier to entry?
Yeah, I mean, well, I wish it was never in the early days. Selling's never easy when you don't have any customers. So starting out, so
Yeah.
we did generate a tremendous amount of interest, and the reason being is that QR codes on its own, especially in Asia and places like China, where we started out our commercial activities, QR codes were already starting to be used in mass. And so when you came and said, "Hey, we offer you a QR code, but then you can also use it as a tool for anti-counterfeiting." And there's a platform to manage the life cycle of that QR code, so you can do all of this amazing track and trace and consumer engagement activities. It was extremely compelling. So that really got us our foot in the door at an early stage. And our initial strategy, even though majority of our customers were multinational companies from Western Europe or the US, is we started in China and Southeast Asia, where QR codes were already being used at scale, where you didn't have to explain to people, "Hey, what is a QR code? Do people really scan that?" Where 5 or 6 years ago, I needed to have that conversations in Western Europe and the U.S. It's becoming what we've seen over the last 5 or 6 years is a tremendous growth in QR code adoption in Western Europe and the U.S. Not as it's not at the same levels as China, but you see companies like Apple has integrated QR code reading into their camera app. So as Android software, Instagram just came out with a new QR code release. So everyone's kind of copying the WeChat ecosystem and what's happening in China now in terms of using WeChat for payments and various other methods for connecting the offline to the online world. So it's quite exciting time for us.
And can you speak a little bit? So there's blockchain factors into the equation here. And can you speak a
Yes.
little bit about how its role sort of in ScanTrust's solution?
Yeah. So it's funny when we start to talk about some of the work we're doing in terms of supply chain traceability. We've recently last year we launched one of the largest implementations there is out there right now for CPG with Unilever on their flagship brand Knorr, where consumers in Vietnam can scan sachets of Knorr soup and they see the whole history going back to the pig farm where the bone marrow comes from in the soup. And we start to explain our projects there. Everyone's instantly, "Oh, blockchain. So you guys are using blockchain." And we didn't start out as a blockchain company. We're still not a blockchain company, in fact. Um, and the reason being is to create true transparency and traceability in your supply chain end to end. It first starts with digitization and a digital foundation. So we didn't start to implement blockchain to say 2 or 3 years ago, even though there was starting to be a tremendous amount of buzz going on in the space. And the reason being is, blockchains are great, and we'll dive more into that. But we all know the adage "garbage in, garbage out." With blockchains, it's garbage in, garbage forever. So if you do not have a strong digital foundation of your in your supply chains and quality data coming in from your farms, from your processing facilities, from your production house, from your distribution set up in there, it doesn't matter if you're using blockchain or not. It's not gonna add any value to you, and it's actually gonna be a disservice to your consumers or anybody who's extracting information off the blockchain. So really what we focused on first at ScanTrust was setting up the tools to allow companies to digitize at scale. And then once you have that, you can connect. There's a lot of value we see in layering blockchain technology on top or incorporating that into the overall architecture of a solution. And specifically two areas when it comes to supply chain that we see opportunities in. The first is, of course, from more of a transparency side. Like, okay, say you've invested all of this money in developing a ethical, transparent, and sustainable supply chain, and you now want people to know about it, and you want to broadcast that image. Once you start to layer blockchain technology on that, you give a tremendous amount more of credence and transparency to the data that you're sharing with everyone. And I think there's and I think pretty soon this will become table stakes down the road as we see a huge demand across the globe from consumers to know more about the origin and the story of their product. Where does it come from? And we see blockchain playing a major role in that throughout, from farm all the way to fork. But it's not necessarily needed for each situation, you say. And the second area we see, and in general, what excites me is where I see is blockchain unlocks a lot of opportunities in the supply chain where there's multiple parties who were exchanging data and information. And in the past, there was a tendency not to be so open and sharing data amongst, say, suppliers and their customers, for example, because it was proprietary trade information. We see blockchains really well-designed blockchains really enabling the exchange and flow of data in a way where it allows everyone to benefit, but it also protects trade secrets or proprietary information to a specific party who, in the past, if it was just, say, traditional database and some Oracle database or whatever, they wouldn't want to share that information.
And it's my understanding that you're using Hyperledger, and I'm curious to know why you chose Hyperledger versus others.
Yeah, we have implemented Hyperledger. We are actually blockchain agnostic ourselves. We see the space. We think it's much too early to pick clear winner or winners in terms of the protocols being used out there. We have done several implementations with Hyperledger, and one of the reasons we chose Hyperledger and we liked Hyperledger is first and foremost the community. There is a very large community and growing community of both developers and large corporations, brands who are ultimately, our clients, who are already working within this community, and it's extremely well organized. Of course, Hyperledger underneath, the Linux Foundation, one of the, if not the most successful open source projects of all time, and so it's extremely well run. And so at this stage where it's still difficult, to say what's the technical winners, and the landscape changes, monthly almost, but certainly every 6 months. We wanted to start working with a community that we had a strong basis and is going to be around and had a tremendous amount of support already. And certainly, when you also work with Hyperledger, secondary thing with bigger companies, and we've implemented it on some pretty large enterprises, it's easier to choose something they're familiar with as well.
Well, that was actually going to be my next question, because, of course, I was going to ask your experience in selling or mentioning even blockchain technology to companies such as Unilever or, another large multinational corporation. So have you found it to be, what I guess advice would you give to founders running blockchain companies that hope to sell to, more traditional companies that aren't based in the blockchain space?
Sure. Yeah. Well, I think it's shifted on slightly. When we're in the heydays of, say, maybe 2017 to even early 2019, we saw a lot of money in this innovation bucket area where people CEOs were hearing about blockchain and they start speaking to their team. What are we doing blockchain? Do we have a blockchain project? They see the press releases out there, and we saw a lot of FOMO buying, if you will, at some point where people, where people were like, oh, are we missing the boat here? As well as a lot of smart, money being invested from using innovation pilots to say, hey, there's a lot of buzz going on here. There is something here. Let's explore there. And so we saw a lot of projects and money being invested through innovation budgets. And there certainly is a little. And those were dollars well spent, I think, because they gave a lot of these companies the ability to dip their toes in and learn about blockchain beyond just reading all of the, working their way through the numerous press releases and noise was out there from both blockchain companies and the various ICOs. We've started to see that die down a little. What I will say is become fundamental to big brands now today is creating traceability in their supply chain to both reduce risk and then also improve efficiency as well. And ultimately, I think blockchain has a huge role to play in it. But right now, I think there's a lot of work that first needs to be done, as I've alluded to already, in companies setting up the foundation to enable these traceability. These large multinational corporations have incredibly complex and large supply chains. And for some of them, the step one is just mapping it, because they have a tremendous amount of suppliers, tier 1, tier 2, tier 3 suppliers, and they're just wrapping their head around that and just centralizing that information together. And so I think there's several steps along the way to play with that, but certainly any type of solutions right now which are helping in terms of helping brands with that upstream traceability, and helping them do that in an efficient way, um, uh, are extremely valuable right now. But a lot of it also first is digitalization, even before the blockchain, on top of it. So
Where do you see where do you see the biggest, like, do you see it in the luxury market, or do you see it in pharmaceuticals where it's like the biggest pain point, or do you see it in food, for example? Is it really just across the board?
well, it's happening across the board, but there's certainly some industries where it is happening faster than others. Pharmaceutical, certainly. There's already in place, even before there was a tremendous amount of blockchain. There was government regulation of pharmaceuticals in place for serialization, that was required for you to sell your product in the market. So there's already this baseline of traceability in place right now. But then we do see blockchain being added into the pharma space, as a tool to enhance that and meet government regulations, especially with product recalls. But definitely the food and beverage, we see it as an industry. People are moving for that direction, and it's very much consumer driven. As I alluded to earlier, there is a huge shift in consumer behavior, consumer buying patterns. I would say the consumer has never been more empowered, throughout the history. If you look kind of post World War II, there was a very traditional playbook for big food companies, big brands, that relied on economies of scales, mass distribution, traditional marketing methodologies, and that has in the last 10 years, the combination of social media, but certainly the access to the internet and access to information has been turned on its head. And consumers are expecting to know more about the products they're buying. They know it's possible to access that information. Everyone's connected, and this is putting a tremendous amount of pressure, on that industry. So we definitely see, there's a lot of heavy lifting that's happening behind the scenes, but there's an accelerated movement in the whole supply chain traceability space happening in food and beverage for sure. And I see this as an industry-wide movement. And we're talking here 5-10 years from now, this is going to be standard, across companies big and small, to have deeper traceability and sharing that not only internally in the organization but with consumers.
And so, I guess going back into digging deeper into your personal background, you used to be in the corporate world, and when you met your co-founder in Jakarta at a bar, were you looking for something new? Did you always want to get into startups? I guess, like, what made you sort of want to make the switch into creating your own business?
Yeah. So yeah, I mean, I guess I was, by the end of it, I was in the corporate world, where when I left the company, we were a Nasdaq listed company, close to $1 billion in market cap. But when I joined, it was very different. I joined when we were less than $10 million in revenue in just a period of a few years. We went from 10 to 300 million. It was just, selling just in China. It was actually a Chinese company, to selling in over 60, 70 countries in the world, listing on Nasdaq. And I had a front row seat in all of that, and just experiencing that hyper growth, and just the constant influx of every day and every week, something new and challenging and different, was really exciting. And I really enjoyed that journey at the company. When I left, it was still growing at quite a nice clip, but it had moved kind of out of that hyper growth mode, and it was clear product market fit, and it was more about just executing on a proven business model. And it was an interesting product from a technical point of view, but it wasn't a product I was passionate about. And when I met Justin, this has already been the issue of counterfeit goods, of illicit trade, was already something that I personally had been following very closely in China. I grew up in Vermont, in a town of 3,000. I knew everything, or most everything I was buying, before farmers markets, were some cool hip thing in Brooklyn. This is how I was buying on a daily basis. And China was anything but that. And so it really became something that I was constantly thinking about: where to purchase goods, where do products really come from? And when I had met Justin, it was the first time I had seen and heard of a digital technology, something that could scale, and really help people, to know more about the product, but also be realistically implemented. Because the company I was working at, we had tried to implement a few traceability solutions, and it was just too expensive, or just dead on arrival, really to implement. So it was like, we'd love to do it, but just we weren't getting the ROI. And so seeing this, it got me personally excited, and it didn't really take me too much. You could say maybe I moved too quickly, but right away I was taken by it, and it was just the right timing. I guess you could say I had run my course at the last company, achieved what I needed to, and I was excited to start anew. And really though, I think beyond being passionate about the issue, to being part of a technology that you can really scale. Leveraging a SaaS model was what really excited me, to be able to have that reach.
What has been some of the biggest challenges you faced, I guess, starting from an early stage startup at ScanTrust, generally speaking?
Well, I would say one is just a general challenge. I mean, it's a challenge. It would be, I would say, and then both my best decisions and my worst decisions. And then the other is just a personal challenge, I guess I mentioned. But the first one, the general issue is always comes down to people. I would say the best decisions I've made with ScanTrust so far is certain hirings. And the worst decisions I've made so far has been hiring as well. And, ultimately at the end of the day, a company as well as a business, because your clients on the other side are people as well. It all comes down to people. And as great as the idea is, as great as the market demand is, you really only go as far as your team. And so I would say that's a challenge that is every day, because we're constantly needing new skills. We're constantly needing new team members to join us. So that challenge never starts. The art of being able to hire perfectly and never make a mistake, right? Always hire the perfect person, and that just never really works out. I think by and large we've been successful in that. More often than not, we've got we've made the right choice with people as opposed to wrong, but never been 100%. But I would say that first and foremost, and that's always in my mind there. And then just the personal challenge I have is I'm a very excitable fellow. I like to dream. Everything's possible, and so always having to make sure you're focusing enough and on the right things, and not trying to do a million things at once. And luckily, I'm surrounded by some great team members who are good at keeping me grounded, but also can run with some of my zanier ideas as well. So it's good to have that balance. I think if it was a team full of folks just with me, we wouldn't have gone anywhere. We would have had a lot of great ideas, a lot of interesting stuff to talk about, but the execution would have been tough.
What advice would you give early stage founders in regards to hiring that you learned that you wish you had knew?
Oh, that's a good question. That I wish that I had known. Well, I mean, I wouldn't say that the advice is something that I didn't know, but you always hear things. It's the same with your parents. They tell you things, but you don't listen to them, and you do it anyways, and you don't really figure it out till you make the mistake. So I don't know. I think you got to make your own mistakes in a certain way, and that's the same with the company as well. But it's something you hear all the time, but it's very true. It's better to not hire for a position than hire someone you're not fully confident about. It's better to wait. Even as burning as that issue may seem, like, oh, damn, we really need to service this client. We really need to do this, especially for your key roles, your manager positions. Absolutely. Don't pull the trigger too early because you feel you have to. If you don't feel fully confident with that hire you're going to make, it's better not to do it.
And what about some advice for founders, particularly early stage startups, since you've gone through this, in terms of getting fundraising for like their, from their pre-seed to their seed round, or even their A?
Oh, well, geez, I'm not sure if I'm not sure if I should say this, being interviewed by a VC, but push off the fundraising as long as you can. Ultimately I think fundraising is good, but really have a goal in mind with what you're doing. Don't just raise for the sake of raising, because that's what people do. I think if you, if and you probably won't be able to successfully raise if you can't articulate your goal as well, right? You guys are sharp on the other side, but yeah, I think I've seen a lot of fellow founders. I think we've been pretty good at it, but you can really easily blow through cash and not really be clear in hitting your milestones if you're just raising for the sake of raising because you feel that putting out a TechCrunch release on your fundraising round is a milestone in itself. Then you're doing the wrong thing.
And what have you found are some great to have when you are fundraising? What are some things that you found that's made your life sort of an order of magnitude easier?
I think, yeah, that's the
like
best.
Is it traction, product market fit? What have you found where it's like, okay, great. This has been made my life easier.
I think, your existing, what I like to say is like when you're raising your current round is start to ask people what you need to hit for your next round, right? So start talking to people who, if you're raising your Series A, and you're talking to people who are Series B investors, either ones who might participate in your Series A round or not, just start asking them, what metrics do I need to hit to raise that Series B round, at these terms, and then use that as your guiding post, calibrate in, get various data points and calibrate in, and then understand, okay, this is what, I need to hit with this money I'm raising the Series A round, and use that to, map out how much money you're looking to raise. And then, ideally, so even before you start your first initial round, whether you're doing the seed, start thinking about your Series A and use that as your guiding post, your guideline as you raise that existing round. And I think if you kind of start to have that mapped out in your mind already, you'll be able to articulate a much clearer vision, and then you can, when it gets to raising that next round, since you've already been focused on achieving those numbers, it makes that existing fundraising round easier. Because if you haven't already done it by the time there, it's going to make it a lot harder, and it's going to rely totally on your marketing skills. Which, certain people who pull that off, but that's more of an exception than a rule. So.
How important is it? You mentioned about interviewing employees that you might hire, but how important is it to sort of interview potential investors that you're bringing on?
Yeah, absolutely. Yeah, it's a marriage in a way. So, if you're doing the job right and you don't have your back against the wall, be as deep as you can. I always encourage, ask for some references to talk to some other founders, reach out to other founders, look at their portfolio companies, see if you have any connections, and ask around to really get a feel for them, for both the firm, but then certainly whoever will be representing you on the board or as a board observer as well. And yeah, you got to put them through the races. I guess it also depends on how much leverage you have at the time you're raising, how hard you can push. It's always a give and take.
Yeah. And how do you build your network, not just with investors, maybe potential customers? How do you nourish those sort of relationships with individuals while you're also running a business at the same time?
Yeah. Well, one, to a certain degree, you have to be focused. You can't build a deep connection with everyone, right? So you have to really start with prioritizing what is important to your business, across the various realms: commercial, fundraising, partnerships, potential acquirers, if that's what you're looking to do. And then from there, I think limit the amount of people you're reaching out to. And that's how I think you have to go through that process first. And then from there, I mean, if you're not overextending yourself, at the end of the day, they're humans, right? So each of these individual humans, you got to figure out the best way to communicate to them that works for your relationship with that. Some people, I have relationships that's purely LinkedIn based. Others, it's a regular phone call. Others, it's in person, although that's even less so now, post COVID. Zoom, have a virtual Zoom lunch or virtual Zoom happy hour beer with folks. But yeah, you have to put the time in. I typically try to have a key group of people that I'm trying to stay in touch with, both paying clients and non-paying clients, and or industry contacts, and you reach out to it. Make sure you have a few really high quality interactions with a few people in that group every week.
Mm. And so how is, I guess, we'd be remiss to not talk about COVID, but how has COVID affected your business? I would imagine it's still sort of business as usual from an operational standpoint because goods are still being sold, food's still being eaten, right?
Yeah.
But how has it affected your business?
Yeah. Well, mid to long term, we're certain. I think we're definitely seeing benefits for, and we already have. But when COVID first hit, and we kind of got it in two waves. The first wave was late January and February in Asia, where we do a lot of business in China and Southeast Asia. Obviously, the the outbreak happened there first, and then again in mid March in Europe and Western Europe, where, where people finally realized that okay, this is real, and this is happening. And you're right that business continued to go on. In fact, we didn't we're not in the travel industry, we're not in the services industry. Our business didn't go down 80%. In fact, we have not lost a customer from COVID. In fact, our existing client base started using our products more because as you mentioned, business went on, products were sold. Some of our clients were selling products that a lot of the consumer product goods companies that we have saw an explosion of growth, which increased the usage of our solution. But in terms of new clients, especially since we're selling to mostly enterprise clients, we just saw a pause in all activity. So there was just a pause for a short period of time as these large companies were first just trying to figure out, how do we communicate? How do we work from home? These are not organizations who are used to working virtually. Everyone had their going into their office and then their desk. And then there was there was so much uncertainty. We did see a lot of budgets be paused and projects paused for a little while. So we went through a couple months where it was looking pretty hairy. For us, we weren't losing business, but a company in the stage we are, where we're at a growth stage, and we're looking to increase our revenue base to support the business. We really had to tighten the belt significantly in terms of costs across the organization. Now, interestingly enough, what we've seen is now as people have adjusted from the new normal, specifically when it comes to supply chains, COVID-19 has laid bare what happens to you if you do not have visibility within your supply chain, or you do not have abilities to communicate to your customers in a different way in an increasingly connected and virtual world. So essentially what we've seen is that digitalization of the supply chain, gaining further insights and control over your supply chain, coming up with new channels to interact with your consumers, such as connected packaging. These are big topics right now. And so, since mid-June, we've never been busier actually, and we've started to sign a slew of new deals and working on some of the largest contracts we've ever signed. So we're starting to see a huge shift in that, and our connected packaging platform is really I think it's accelerating trends that were already happening. But would have taken 3 to 5 years is now going to happen in 1 to 2 years in terms of some of the decision making within organizations.
And did you guys did you guys have an office sort of virtually distributed?
Yeah, we have several nodes. So we're headquartered in Lausanne, Switzerland, out of EPFL, which is one of the kind of one of the MITs of Europe, if you will. And then our largest office is in Shanghai, China, but we already had offices around the globe. We were fairly distributed because our clients are distributed. So we have offices in Singapore, team members based in Indonesia, India, Ukraine, Belgium, Amsterdam, Germany, US, South America, all over. And so we were to a degree already fairly virtual. So in terms of internal operations, we were able to very easily move into a work from home environment. I think the biggest challenge of that is not so much being able to communicate with each other to do the work, is losing that personal connection. People were always traveling around to various different offices, seeing people, having that, even if it was once a quarter. And that was, I think even though fundamentally, I don't think work will ever be the same in terms of we work, and it will move into more of a hybrid model. I've seen a lot of people in our team who they appreciate some of the flexibility from working from home, but they really miss that human connection, that human interaction. We will say our office in China has now been open for a couple months, and essentially we give optionality to our employees to work from home still if they want to, kind of that loose hybrid model. But most of our employees are there almost every day in the office already.
Have you felt that productivity's gone down, stayed the same, gone up?
In a weird way, I would say it's gone up in a way because, and I think this is something that everyone needs to worry about. I feel that the lines have been blurred, before, especially when you're working from home now, and especially for those who have children, but it's not just those who have children, because you kind of have, I have my work Nathan, I have my husband Nathan, I have my father Nathan, and you have, my me time Nathan, and there's multiple different Nathans. And when you're working from home and you're around everyone in your family all the time as well, that's great in some respects, but it also blurs the lines. And I think it's really, if you don't watch that and really pay attention to making sure you're creating some sort of, guidelines to not have all of those different versions of you combined together at the same time, it can really put you into a funk personally. And I've certainly seen that with some of my colleagues. And so I think this is something that really needs more attention from companies and managers and colleagues in looking out this, and takes a lot of understanding about it as well, because it is different.
Yeah, no, some Sundays feel like Wednesdays, right? So
exactly, right, yeah.
Yeah.
Our Slack channels on the weekends have never been so busy.
Yeah, no, it's an interesting challenge. But so I guess if anyone has any questions, I'll just dump them in the Q&A and I'll ask them. So I'll start with the first one. How are brands ScanTrust works with addressing the risk of product fraud replacement between production and packaging or application of the code?
All right. So, the risk of product fraud replacement between production and the packaging of the code. Yeah. So,
or packaging and application of the code.
Yeah. So typically, what we do, that's a really good question, and this is an issue. And so, typically, when we do a packaging of a product and you're applying what we do is our projects include unique IDs. So each and every product is getting a unique QR code on it. It's not just one QR code across all the products in that batch. Every single product that you have is unique. And when we generate these codes, they're inactive. And so when they're being transferred to, say, a production site, what happens is at the time of production, the filling of the product, you typically have an activation process. This means something where you have like a camera in line and you're scanning the codes and you're activating it. So if some products or packaging or labels fell off the back of a truck along the way, someone could make a counterfeit product out of these, but the codes wouldn't have been activated at the brand's production facility and site. So, each and every product and process flow is different, and you really need to think about this and how products flow through to bring as much security as you can through the process.
Second question I have is, can you discuss cost per unit of using the tech? Are most companies you work with tracing by batch or by individual unit?
Yeah. So, the business model that we employ is we have a platform fee it's a modular platform fee based off of what features you're using. So you can just use our anti-counterfeiting technology. You can use it track and trace as well as consumer engagement as well. And there's a fixed fee for that. And then we do have a per unit fee depending on the number of codes or products that you're tracking and protecting as well. But there's a tremendous amount of economies of scale at this. You do pay more as you use more, but the cost per unit goes down significantly. So especially for a lot of the bigger projects that we're doing, where we're talking about hundreds of millions of products, even into the billions of units, the cost per unit comes down significantly, and in many cases well less than a cent per unit at scale. And so it becomes quite cost effective, and there's a tremendous amount of ROI on top of that. When traceability, what we see is products are getting individual unit tracking themselves, each and every product. But in terms of traceability of showing, if I was to scan, I mentioned the Knorr example earlier, where consumers can scan a Knorr sachet and see the whole history of that product. You're not seeing the history of just that individual product. You're seeing the history of that individual batch. So in terms of the transparency of data that's being showed in traceability, even though individual unit products are being traced, companies are typically sharing or only know the batch level of data of a specific product.
Great. Well, that's it. I'll end with this, and I ask everybody this question, but how can we be helpful to you?
You guys keep just doing what you're doing. You know, SOSV has been a great partner of ours from the get-go, from, you know, working out of the China Accelerator offices in Shanghai before we were, I think we even incorporated, to, you know, the various introductions to the various numerous corporate partners. So you guys, so I mean, I think just keep doing what you're doing, get bigger, and keep on getting better, and, you know, that will trickle down to us, I'm sure.
Thank you. Yeah, thank you very much. We're certainly trying. Well, Nathan, thank you for coming on. If anyone would like to learn more about ScanTrust, they can go to www.scantrust.com to find out more. But Nathan, thank you very much.
No problem. Thanks, Paul. And you're still one of those people who still puts www in front when they speak it. I was having a debate the other day. There's it kind of dates you there for a little bit.
Yeah. No, I guess you're right. I guess it's just say scantrust.com. But anyway.
No, I appreciate it, Paul. Thanks for having me on.
Yeah, of course. Thank you very much.